The Center for the Promotion of Private Enterprises has projected inflation to moderate slightly on the expected reduction in volatility of the exchange rate and possible rebound of the naira. Director and CEO of the center, Dr. Muda Yusuf, made this projection in his 2024 Economic Review and 2025 Outlook, where he noted that despite the intense macroeconomic headwinds in 2024, the Nigerian economy exhibited resilience on account of GDP performance. Mr. Yusuf also forecast moderation in energy costs as the geopolitical tension eases as a result of the impact of Donald Trump's presidency. Dr. Yusuf emphasized the need for revitalizing and restructuring of Bank of Agriculture and also agro-allied industry with the much-needed concessionary financing. I have him live in the studio, the CEO of the Center for the Promotion of Private Enterprise, Dr. Muda Yusuf. Thank you so much. It's good to have you on the 30th of December 2024. Thank you for joining us.
Thank you, Tulu. It's a pleasure to be here.
I think we need to start with this overview of what we've seen in 2024. And these are the major steps being taken by government. But after these steps, GDP grew 2.98%. Now I'm following the Economic Review, your report, for the first quarter. 3.19% in the second quarter and 3.46% in the third quarter. It seems we are closing up to what IMF and, of course, the World Bank has projected. What is your review of all of these figures that we've seen?
Well, for me, it is an evidence of the resilience that the economy has shown in 2024 because it has been quite challenging for businesses, particularly on account of two major factors or three major factors. The factor of the exchange rate depreciation, the factor of the high energy costs, and the factor of insecurity. You know, those three factors were major headwinds for the economy across all major sectors of the economy. So if in spite of that, we are still able to post a GDP growth of 3.46 as at the third quarter, I think that is a very good performance. And we are hoping that as we remove or deal with some of these headwinds going forward, the situation will get better. And don't forget, even in the budget, 2025 budget,
yes,
the projection for GDP growth was 4.06. You know, here we are already doing 3.46 as at the third quarter. And my expectation is that the performance for the fourth quarter is likely to be better than the performance.
So it's not too ambitious.
No, it's not too ambitious at all. I think it's something that is realizable. You know, so we may be closing the quarter, the year, at about 3.6 or 3.7. You know, so the 4.06% projected for 2025 under the MTF it's not ambitious at all. Yeah, if we be able to sustain the current improvement in our macro environment, we are likely to, achieve it and possibly even surpass it.
No.
But GDP is one thing.
Yes, that's true. Go ahead.
The other issues that citizens and businesses worry about is a completely different matter. I'm talking now about the cost of living and the cost of doing business. So going forward, I think we need to be very deliberate in tackling those things. The fundamentals are good. It is good to focus on fundamentals like all this GDP, exchange rate stability, and all of that. But it's also important to take deliberate steps to improve productivity, to reduce cost of production, and to ensure a lot more certainty and a much better regulatory environment in 2025. But so far, I think, given what we have experienced, I think it is not a terribly bad year. Yeah.
Great. Staying with the report on sectorial growth disparities, now the services sector continues to dominate sectoral growth. Can you shed more light on this? And what about other sectors, particularly the oil and the non-oil sector? I think more needs to be done, particularly for the non-oil space.
Yes. If you look at the sectoral growth performance, you will discover that the services sector did much better, than the real sector. Talking now about maybe manufacturing and agriculture.
Yes.
A good example is the financial services sector. The financial services sector in Q3, well, that is the benchmark I'm using now. The financial services sector grew by, 32%. Insurance grew by about 19%. But agriculture grew at about 1.14%. Manufacturing grew at 0.95%. The trade sector also grew at less than 1%. The significance of that is that these sectors are very critical to job creation. They are very critical, to self-reliance, food security, a lot of things that we desire to achieve. They are very critical for economic inclusion. They have much bigger impact on poverty reduction. So if you have a situation where the services sector, particularly the financial services sector, is growing at such a phenomenal rate, and the sectors in production are struggling, there's a major issue for the economy. So it's a major shortcoming that we need to address from a policy perspective, going into 2025. We need to see a situation where the production sector are put in the mainstream of the economy, because right now, many of them are struggling. In fact, I saw, one or two of those in the production sector, in the agro-allied sector, who told me that each time he saw the bankers, he would tell the bankers that we are working for you. Because here was a company that took a facility at 18%. Now they are servicing the same facility at 35%. You can imagine the pressure. Not to talk of having to worry about the cost of diesel, cost of electricity, cost of logistics, and the challenges at the ports, especially the cost of cargo clearing. So these pressures are not good for the recovery of the economy, for economic growth, and for our desire to also be self-reliant. Because if those who are in production are struggling, and many of them are posting losses, then the whole idea of looking inwards and reducing importation, we will not make much progress on that front. So it is very, very important that we close that gap in terms of sectoral disparity in growth. Because the challenges faced by those in production is much higher than the challenges faced by those in the services sector. I'm not saying that they are also not facing challenges. Because I know of hotels and supermarkets that are groaning because of the cost of energy. Because if you have an hotel, whether you have 20% occupancy or you have 100% occupancy, you are running your generator. And the same thing with supermarkets. And these are businesses with very, very thin margin because the competition environment in those sectors are also very high. So you don't have that much profit to play around with. So it is very, very critical that we deal with those fundamental issues that will bring down the cost of production in 2025.
Indeed, Forex review and outlook is also we've seen a bit of stability, I think, in that space for some time. And also thanks to foreign reserves, which seems to be looking good. I think it's about $40 billion at the moment. And also other moves by the Apex Bank. But how do you see this moving on as we get into 2025? Are we going to sustain this? What more are you expecting now from the Apex Bank? Some measures, some will say, are stringent, affecting businesses. We've identified some of them. But what do you think can really be done with regards to this Forex exposure that Nigeria faces?
Well, the issue of Forex, first, we must appreciate the progress that has been made, which is, also as a result of the current reforms. Of course, the reforms has come with a lot of pains, as we all know. But some progress has been made, which we also need to acknowledge. Now, from July to date, we have seen some relative stability in the foreign exchange markets. Our reserves are looking much more positive. In terms, I'm talking of liquid reserves, much more positive. And the higher your reserves, the higher the confidence that people have, within the economy and even within that foreign exchange ecosystem, And the inflows from IMTOs, International Monetary Transfer Organizations, has been improving. Diaspora remittances are also doing very well because of the weakness of the currency. a lot of our people in diaspora feel encouraged, to bring in more money, to invest in properties, invest in stocks, invest in fixed income securities, and so on. A lot of that is happening because weak currency is an incentive for people in diaspora to bring in more money into the economy. And we are seeing quite some evidence around that, And of course, the Euro bond that we did successfully, that is also a good thing for the reserves, even though some of us have concerns about the cost of the Euro bond. But whatever it is positive for the reserves. The same thing with the domestic dollar bond, which was also oversubscribed of $500 million. That preceded the Euro bond. The one that was done domestically. That is also good. So if you put all of these things together, they are pointing in the direction of further stability of the exchange rate going forward. And don't forget, the CBN also had cleared some legacy debts or legacy mature obligations,
yes.
In the Forex market, totaling close to $7 billion. That was a major pressure for the CBN in 2023 to 2024. So if we are no longer dealing with that, I think the CBN will have a much better space, to continue to intervene. And you know that the CBN has been intervening. Unlike what we had maybe in the second half of 2023 or in the first half of, or in the second half of 2023, the CBN now periodically intervenes in the market. And beyond that, the Forex market is also characterized by a lot of malpractices.
Yes.
Sharp practices here and there, so many moving parts that if you are not very vigilant, it can sabotage the whole system. And the CBN seems to be on top of that. That is why from time to time, you see new guidelines, new policies, and all of that. And the recent electronic framework for trading has also brought some transparency into the market. And more importantly is the import substitution effect of the Dangote refinery. Because importation of petroleum products is one of the biggest pressure points as far as the foreign exchange market is concerned. So if we're able to sustain the support for Dangote refinery and other domestic refineries, the Port Harcourt refinery, and you are just telling me now that even the worry is coming up.
Yes.
All of this require government support, fiscal policy support, both for the private investors in the sector and the one that is for NNPCL, so that we can be fully energy sufficient and possibly be exporting. Because this is what the president even said when he was presenting his budget, the appropriation bill to the National Assembly. The expectation is that we will import less, we'll be fully self-sufficient, we'll stop importation, and now begin even to export. So that will be a game changer for the economy. So if we're able to achieve that, and government needs to support that process, then we'll see a lot less pressure on the demand side of the foreign exchange, and that will further help the stability. So in all of this, while we look at the outlook as being positive, yes, it is important to emphasize that government fiscal policies need to support the process. That is the only way it can be sustainable.
Inflation, is what we must talk about. It's the crux of all of this. Everyone wants inflation to come down because, of course, purchasing power and all of that, so that Nigerians can continue to buy and do what they want to do. But the projection, CBN at the time said inflation targeting. We are going to try and make sure we try to bring down inflation. But with all of these challenges that we identified, with all of these moves being made, what is your fair projection for inflation for 2025? And what are the fundamentals surrounding your projection?
Now, for inflation, first, we need to identify the key drivers.
Yes.
The first one is the exchange rate. And from what we are seeing
a bit of stability.
A bit of stability. So that is positive for the outlook for inflation. The second one is energy costs. Now, we're also beginning to see some positive signs. The reduction in the retail price of PMS, we are hoping that that will also extend to diesel and to aviation fuel. Because manufacturers are also concerned that each time we talk about the price of petroleum products, we're always talking about the price of PMS.
Yes.
Whereas the cost of diesel is a major
business
issue.
is manufacturing and all of that.
It's true. Logistics. This is diesel.
That's true.
So we should also spotlight that. How we can support the process to also bring down the cost of diesel and the cost of aviation fuel. Many people are now, they can't fly anymore because of the cost of flight. And the biggest cost component is the cost of the aviation fuel. So going to 2025, we need to do a lot more in those areas so that we don't just leave the sector to just be running like that. If there are things we can do to bring down their costs, I'm talking about now those who are producing those things. That will help a great deal. Then, of course, the CBN had done a lot trying to tame inflation in 2024. We saw the tightening of monetary policy, which got almost to the extreme. Because if our CRR, cash reserve ratio, is at 50%, I don't know of any country in the world where you have a CRR of 50%. On top of that, you have the NPR. 27.5 or so, which is also very high. And that is having a lot of pressure on the cost of doing business. That is why interest rate has gone as far as 35% or even more. That is not good for investment. So the focus for arresting this inflation needs to shift to the supply side of the economy, not the demand side, which is driven largely by all this monetary policy. Monetary policy instruments have been overstretched. So let's see what will happen. And some of the things that the government is trying to do is to support production. I mean, you just talked about what is happening with domestic production of petroleum products. That is important. We are talking about what will happen to security, so that more farmers can go to farm. We are talking about what will happen to agri mechanization. The president said in his recent interview that about 2,000 tractors are coming. That is good news. But more importantly, we want the farmers to be able to go to the market and get these tractors at a very concessionary price. Because not everybody can, get the one that the government is bringing. So let's create the ecosystem so that you don't even need to know anybody.
You get it.
Because those prices have come down. If you need to subsidize farm equipments, machineries, tractors, whatever, agrochemicals, let us subsidize them. Because if we are talking about subsidy, this is the kind of subsidy that can support production. So subsidy for production is something that we need to focus on, so that not all the revenues will be going to the purse of government. Let some of those revenue come to subsidize those who are in production. That way, we'll be able to, the benefits will cascade down to the citizens, so that we rely less on palliatives and have a situation where I just go to the market and buy these things at a much cheaper price. So we should address this issue from a production perspective, subsidizing the production process in a way that the subsidies will not be abused. Because we know the kind of abuse that we have suffered from the PMS subsidy and so on. So we have to be very deliberate. And these things happens, almost in all countries of the world. When you see people come from Asia and they are almost overrunning our economic space here, it's not because they are such smarter entrepreneurs. It's because they are getting support from their home country. When they come here, they are not borrowing funds at 35%. They come with cheap funds.
Yes.
Their home parent companies we bring down machineries, give them raw materials and all of that at highly concessionary rates. While our own citizens are struggling with bank credit of 35%. That is not a level playing field. I don't want to create an economy where our own citizens will be onlookers in the economy. Because we are losing ground very fast to some of this. I'm not saying we don't need foreign investors. But we should be conscious of the fact that our own indigenous investors also should be in the mainstream of this economy. And we have to take some deliberate steps to ensure that that happens.
It's an interesting one. I know we can go on and on, but let's just wrap up in 2 minutes. So key business risk for 2025 that you identified in this report. Forex volatility, you've talked about interest rate inflation, financial monetary risk. Which are you saying businesses should really look at as we move on?
You see, when you are looking at the risk variables in an environment, the risk variables impact different sectors differently.
True.
If you talk about security risk, those who are in the agricultural sector, agri sector, are more vulnerable to that.
Yes.
If you talk about foreign exchange risk, those whose production processes are very sensitive to, who are very heavily exposed, to importation, to offshore credits, offshore shareholders, those ones are more vulnerable, So you have regulatory risk. There are so many variables of risk. But what is important in business strategy is for each company to look at this gamut of risk and determine the level of exposure of their businesses to those risks and have a strategy on how to manage those risks. Because no matter what happens to the economy, businesses must go on. You can't go to your shareholders and be telling them that the economy is this, therefore I cannot run the business. That's not a good manager. You have your strategy to deal with it.
Dr. Muda Yusuf, thank you so much, Director, CEO, Center for the Promotion of Private Enterprises. Thank you so much for making sense of these projections and, of course, a review of 2024. Take care. Thank you so much. I hope to see you in the new year.
Yes.
All right. I wish you a good one. Yeah. All right, then. Well, we'll stay with discussions this time around, maybe more on the oil and gas industry and some major labor issues in 2024.